We will begin in 1 minute.
Good evening, everyone, and welcome to the Finance Committee meeting of October 3rd, 2024. We will now call the meeting to order. And as is our usual procedure, we will now read the land acknowledgement. Grimsby is situated on treaty land. This land is steeped in the rich history of the First Nations, such as the Hattaway-Wurrung, the Haudenosaunee, and the Anishinaabe, including the Mississaugas of the Credit First Nation. There are many First Nations, Métis, and Inuit people from across Turtle Island that live and work in Niagara today. The regional municipality and the town of Grimsby stand with all Indigenous people, past and present, in promoting the wise stewardship of the lands on which we live. Item 3 on our agenda this evening is to ask if there are any disclosures of interest, pecuniary or non-pecuniary. I see no hands being waved. And Councillor Vardy, because we have you on Zoom, and we may not always see your hand raised, if you need to jump in verbally, please do so.
Okay, thanks, Delight.
Item 4 on our agenda is the approval of the agenda, but before we approve this, I would like to step down as chair because I'm bringing forward a notice of motion on the pay-on-demand surety bonds, and that was circulated to the committee by email ahead of time before this meeting. And I do apologize. When I was first working on it, we thought this was going to go to council, and then realized, I don't know why I forgot, because I didn't really forget we had a finance meeting, but realized that we had a finance meeting and that it would be better handled at our finance meeting. And so I do apologize for this coming onto the agenda as a notice of motion, but it seemed the best way to go to the right committee, as our committee is tasked with risk management as well. So at this point in time, I will just step down as chairing this and turn the meeting over. And I'm going to say we'll stay in our seats, Councillor Howe, but I'll turn it over to our Vice Chair, Councillor Howe.
Thank you. In order for it to be formally included, Section 7.71 of the procedural bylaw needs to be waived. And as per Section 12.1, a 2/3 majority vote is needed to suspend the rules. At this time, I have Councillor Davoli as the mover and Councillor Vardy as the seconder to waive the procedural bylaw to include the notice of motion on the agenda and for it to be discussed tonight. There will be no discussion on this item at this time. The motion is moved by Councillor Davoli, seconded by Councillor Vardy. Resolved that the rules of procedure be temporarily suspended by an affirmative vote of 2/3 to add Councillor Davoli's notice of motion to the agenda and discuss tonight. 4? 1, 2, 3, 4.
And
Carried.
Leanne.
And 5. Thank you, Councillor Vardy. And carried.
Then if I could now have a mover and seconder to approve the agenda as amended. Mover, please. Councillor Kristanji. The seconder. Member Thompson, thank you. Resolved that the October 3rd, 2024 Finance Committee agenda be approved as amended. All those in favor, please raise your hand. And Councillor
In favor,
Vardy?
yes.
Thank
Yes.
you. That motion is carried then. And the agenda is approved as amended. Item 5 on our agenda this evening is receipt of the previous minutes. So could I have a mover and seconder to receive our previous minutes? Councillor Korstanji has moved that. Councillor Howe has seconded that. Resolved that the Finance Committee minutes of August 22nd, 2024, and the GDAC minutes of September 5th, 2024 be received. All those in favor with a show of hands? Councillor
In
Vardy?
favor, Leah. Yes, in favor.
Thank you. That motion is carried. Item 6 on our agenda this evening brings us now to our delegation. Mr. Brennan from Grant Thornton is here to present the draft financial statements and the audit report to our committee. So at this point in time, I will turn this part over to you, Mr. Brennan. Welcome here.
Thank you very much. Good evening, everyone. Just a point, as of 2 days ago, our firm changed its name to Doan Grant Thornton. It speaks to our legacy. When I joined the firm 39 years ago, we were Doan Raymond, and we've now adopted Doan as our first name in our firm name. So we're now Doan Grant Thornton. Anyway, so I'm just going to briefly touch on items in the audit results communication. So the status of our audit is that we are substantially completed our audit. The items that remain to be carried out before we can release our audit report is a receipt of the signed management representation letter, the approval of the consolidated financial statements by council, the procedures, then there's some subsequent event procedures we have to follow, and then we wait for the responses from the legal letters that have gone out. I can confirm that our audit strategy was executed as planned, as we communicated in December. We confirmed that there are no changes to the status of our independence. We still remained independent during the audit and to date. The next section is lists the audit risks and results. I'm going to touch on two of the new ones, but on the first page, there's always a risk of audit. It's a inherent or a presumed risk, and the other one is the risk of management override or segregation duties. We had no significant findings as a result of our audit procedures. Other areas of focus is tax revenue with the allowance for uncollectible accounts, government transfers about their qualification as to whether they can be recognized or deferred, payables, and so on. But the two new ones this year are the provision for the asset retirement obligation and the financial instruments. So these were two new standards that came into play that affected the financial statements this year. The contaminated or the asset retirement obligation, a third-party expert was used by the town to make sure that all the obligations were captured and recorded, and we had no significant findings from the result of our procedures. The other, as I mentioned, was financial instruments. Public sector accounting standards didn't have a financial instruments section. It does now. It basically talks about, it requires certain disclosure around what risks the municipality might have in the way of its financial instruments, such as cash, receivables, payables, long-term debt. And again, we had no significant findings from the adoption of this accounting policy. This is a group audit in that we are the auditors of the town, but it also has a government business enterprise, which is the Niagara Park Power Incorporated, sorry, which KPMG carries out, but we review their working papers and communicate with them that we're relying on, or those numbers are being relied on for the financial statements. There are some sensitive accounting estimates. The larger ones are the provision for post-employment benefits, which is $1,092,000. There's a couple smaller ones, which is the provision for workplace safety and insurance board and uncollectible taxes. And of course, the new one, which is the asset retirement obligation, which is recorded at $322,000. Useful lives of capital assets are also deemed to be an estimate, but they are pretty standard in the industry or through the sector. And we also want to note that there was the adoption of the new guidance, which is the asset retirement obligation and financial instruments. The other area that we always have to be cognizant of is whether there's any fraud or illegal acts that are noted during our audit, and we didn't note any at all. As I mentioned before, use of experts, the asset retirement obligation, there was an expert used there, and for the employee benefit obligation, there is an outside actuary that is used. On to adjustments and unrecorded misstatements. I'm happy to report there were no adjustments, no unrecorded misstatements, and no disclosure matters that were noted. And technical updates, there have been no new technical updates that have come out since we last reported in December. This coming year revenue section, the new revenue section 3400 will be in play. That's been communicated in the past. That one came to mind today as we were dealing with another audit and talking about that standard. Our draft audit report is enclosed in Appendix A. It is a clean audit report as in the past. So we have an unqualified audit opinion, and once all the subsequent event and procedures are completed, that report will be issued and will be dated the day that council approves the draft financial statements. The audit report is organized in that we provide our opinion up front and what the basis of our opinion is what our opinion is based on. Then it talks about what the responsibilities of management and those charged with governance, which is yourselves and council, and then what the auditor's responsibilities are. The other appendix is Appendix B, which is the draft management representation letter, which will be signed by management once the draft financial statements have been approved by council. At this point, if anybody has any questions, I'm quite happy to answer them.
I believe we have a question on the floor from Councillor Howe.
Thank you, through you, Chair. The two requirements that were added, I just, after knocking around and seeing what, previous years, at what point do they stop adding, a different line to tick off or a box to check off? Are we oversaturated now?
Through the chair, I will say that change is the only thing that is constant in the accounting profession. And there isn't anything on the horizon that we know of right now. As I say, the new one that's come in is revenues, but we don't have anything else that's significant coming out, but that doesn't mean there won't be next year.
One more if I can, and this is just kind of an observation, but no adjustments. I mean, I would suggest to our Director of Finance that that's pretty good when you can do a whole accounting of a firm and have no adjustments. So I think that that's pretty good work on the part of our team. Thank you.
Any other questions from any of our members? Sorry. Questions about the statements themselves? Or as opposed to the audit report? Yes. So just hold those for the next part, the next report, yes. If there are no questions from any of our members, I just have one as we're talking about unrecorded adjustments. Could you just remind us again of what the materiality was for our consolidated financial statements?
Materiality is based on revenues in accordance with the auditing standards, and it's 3% of revenues. So this year it was $1.3 million.
And related to that, because you are the group auditor and then needed to review the working papers of Niagara Power and so on, can you tell us, or do you remember what the materiality was for that audit?
I don't have that right in front of me. I can get it for you, though.
If you could, please. Would it be safe to assume it was less than 1.3 million?
I don't think it is, actually. I think it's either close to it or, but I honestly, I'm going based on memory, and it was a while ago since I reviewed the file, so.
If you could just reply to our Director of Finance, Mr. Delmonico, and he can share
Certainly.
it with the rest of us. Thank you.
Certainly.
Any other questions from the committee members?
Nothing for me.
Then thank you very much, Mr. Brennan, for attending this evening. You are welcome to stay and listen to the next part, which is the discussion of the actual statements. But if you wish to leave our committee meeting at this time, thank you very much for your services.
Okay, and I'd like to thank the team for their help and assistance and cooperation during the audit. It went very well. And I mean, we did help them with the financial statements because of the new disclosure, but it went quite well, and I appreciate it.
Thank you.
Thank you very much. Good night.
Good night. Then if I could have a mover and seconder to receive the presentation. I see Councillor Howe's hand up already. And I'm going to say Member Scandinavo's hand is seconding it. And then all those in favor by show of hands, please. And Councillor
In favor,
Vardy?
Leanne. Yes.
Thank you. That motion is carried then. Item 7 on our agenda is consent reports, of which there are none, so we'll move on to item 8, which is the report on our consolidated financial statements. If I could have a mover and seconder to get it on the floor, please. Councillor Kristangi and Member Thompson has seconded that. Then I will turn the floor over to Mr. Delmonico.
Thank you. Good evening. I just thought I'd have some visuals here to accompany my my speaking notes to help you understand. So if you want to go to the next slide, please. Thank you. So that's just taken from our financial statements. You see that's a snapshot of our statement of financial position. So as James mentioned, it is the consolidated statements of the town. So that includes the financial statements of the library, art gallery, and the BIA. On page 45 of Appendix A, you'll see that the Cemetery Care and Maintenance Trust funds are reported separately, and those are not consolidated. So with respect to our statement of financial position, there has been a shift in our receivables from taxes to user charges. So one of the factors there was due to the change in the wastewater billing method that began in 2023, where we moved from a method of entirely collecting the wastewater charges from the tax levy to partially levy and partially user charges. You'll also see that our net investment in Grimsby Power has increased by about $780,000. And there's note 5 of the financial statements, which contains more details on our investment in GPI. On the liability side of the statement, there's a due to trust that has increased by about $1 million, and that's due to the maturing of an investment. So those funds at year end were sitting in our general bank account, which is why it's showing as an amount that's due to the trusts. There's deferred revenue balances. Those refer to development charges, parkland, cash in lieu, and building permit revenue. These are not immediately recognized as revenue when payments made to us, but will be recognized in the future as associated expenditures are incurred. The employee benefit obligations, this is an estimate of our post-employment obligations as of the end of the year for benefits that will be payable in the future to employees of the organization, and a small portion of that relates to our estimated WSIB liability, as Mr. Brennan mentioned. You'll see the asset retirement obligation is new. That's the liability related to the obligations to retire our tangible capital assets where applicable, such as obligations to retire buildings with asbestos, as an example. In our case, we are reporting on facilities with asbestos based on assessments that were made by our consultant. And now, this doesn't mean that remediation is immediately needed. I just want to mention that. It basically, when the time comes for redevelopment or to retire the asset out of service, then these are estimates of the costs that would be incurred to remediate at that time. You'll see that the long-term debt line there, that represents the principal amount owing on Fire Station 2, which runs until 2027. Just as an aside, the interest on that debt is 2.81%. And the debt also includes, our photocopier lease is also included on that line. Non-financial assets, that's mainly the book value of our tangible capital assets. And it also includes the value of our inventories and prepaids. With inventories, we're talking about things like fuel, parts for water operations, signs, things of that nature. And then you'll see at the bottom there, our accumulated surplus was restated for 2022 because of the adoption of the new asset retirement obligation standard. Any questions on that before we move on? Oh, I'm sorry.
That's it, right? Yeah, there we go. Thank you. Through you, Chair, to the Director. Thank you for the email through the Chair, Director, on the wastewater and about the water levy. I'm just still a bit confused. I'm wondering if you can just enlighten me, all of you, possibly. Am I correct in saying we had a approximately 36,000 surplus with 33% of the water levy now gone from the taxes over to user fee? So when we're going to go 100%, we can almost say we're going to have $1 million. And was our goal not to just offset the water tax levy of the property taxes for the people? But now we could be possibly looking at $1 million user fee revenue? Is that correct, or am I? Oh, sorry.
So through the chair, yeah, that gets reviewed every year. The rate that we use for the wastewater charge. So, like you mentioned, the intent is to recover the costs. Then depending on what actual flows are, actual cost recovered could be higher or lower in a given year. But it is reviewed every year.
And I think I'll ask Mr. Del Marco maybe just to help us find it eventually, but the region does what I will call a rolling three-year true-up calculation, right? Of which it was quite substantial, and so perhaps when we get to that part of it, you might just want to talk about that and the impact on it as well.
Please, yes. Okay, so this is our statement of operations, and you'll see that taxation revenue is down from 2022 due to that shift we were just talking about. And then for that same reason, you'll see that the user fee revenue has increased. But the increase is related to more than just the shift. It's also due to increased user fees that aren't related to the water wastewater revenue. So things like recreation fees, ice rentals, for example, other programming fees. Government transfers increased by about $1 million. About half of that was related to the SPIF funding related to the PKC, and the other half was related to the Ontario Community Infrastructure funding that supports other various capital projects. Other revenue increased by $2.8 million. That was due to increased investment income as a result of higher interest rates, as well as increased parkland dedication revenues that were recognized. And that was partially offset by less developer contributed assets that were recognized in 2023 compared to 2022. On the expense side, there was a decrease in the general government expenses related to the regional transit fee. So in 2022, this was charged to the town as a fee, and then in 2023, this began to be recovered by the region as a new levy. We also incurred about $340,000 less in legal fees and experienced some more staff vacancies in 2023. Yeah, the environmental services expenses, that increased by 1.7 million, and that primarily due to what you mentioned there, the higher than normal regional wastewater charge. So there is an allocation that the region allocates to all the local area municipalities, and it's based on a 3-year rolling average. And that will depend on not only our flows, but flows in the other area municipalities too. So if ours are higher, then in the other areas will be allocated more of that share. So overall, we're reporting a $9.5 million surplus for 2023 operations. That's, you'd probably be familiar with the $1.6 million surplus that we referred to earlier in the year when we closed our books and transferred that surplus to reserves. So that difference is due to the fact that we report on our financial statements on the accrual basis of accounting, whereas we budget and levy taxes on a cash basis. So the reconciliation of that $1.6 million surplus that corresponds to the $9.5 million accounting surplus. That's been included as Appendix C to this report. And I'll just point out a couple of the big factors. So one of the big factors, if you look at Appendix C, is that our budgeted transfers to reserve were $8 million in 2023. So that is something that we need to tax for. But then for financial statement purposes, because those transfers are going to reserves, they actually add to our surplus. Another big item there is the amortization expense. So that's something that we don't tax for. However, under the Public Sector Accounting Board standards, we must recognize the depreciation on our capital assets, and that has the effect of increasing our expenses and therefore reducing our reported surplus. So again, Appendix C has the line-by-line breakdown that takes us from the operating budget surplus to the surplus reported on the statements. And so you'll see that our total accumulated surplus at year end is now $332 million. So that seems like a big number, but you have to remember that $264 million of that relates to our tangible capital assets, and then much of the rest is related to our reserve balances, which I'll touch on now. If you could go to the next slide, please. Thank you. So this is an excerpt from Note 13. During the year-end audit, I do want to mention that there were a few adjustments and corrections that were made that increased the year-end operating surplus and transfers by $118,000. So the new revised budget surplus for the year is now that $1.6 million that I was referring to. And if you go to Appendix D of the attached report, you'll see that there is a reconciliation of what those changes were for and which reserves were affected. So that concludes my overview. If there's any questions or comments.
Committee members, any questions? Member Thompson.
Yes, through you, Chair. I'm just going to go back to the wastewater and just want to make it clear to the residents listening or to some councillors who may not know. We also may have a surplus from the region. It's always not a deficit. And now if we're going to go to 100% to the water, it's going to relate 100% to your water use going out is now going to be wastewater. So that's a good sign. But we still have infiltration, exfiltration. We have combined sewers, things that rainwater is going to give us some debt. But we may have, not always say a deficit, we may get a surplus from the region on that rolling 3-year average. I just want to be clear on that too.
I can add to that, and Councillor Howe and I both sit on the Public Works Committee, and Public Works is undertaking studies to make sure that we deal with the infiltration into our sewer systems as well, to try and minimize that as much as possible. So they are knowledgeable that that can be, and they know that, and they are working to mitigate that as well. I think one of the things to remember is that everybody was very surprised when the region did their rolling 3-year average, and it came out at that we owed them an additional $1.7 million. Perhaps, Mr. Delmonico, you could just talk to us about how we try to minimize that so that we don't have such a large surprise. We talked about other things that we could do, and I perhaps you could just expand upon that as to how we make sure we don't get such a large surprise going forward.
Yeah, I think just more communication with the region and getting a better handle on the estimates that they're expecting is one step. The infiltration studies is another. Is there water that is leaving the system for some reason that shouldn't be, and that correction could fix and could lower the flows, therefore lowering what we get, the rates we get assigned. So I think that is a project that Public Works is going to be advancing as part of the capital budget process and should help avoid unnecessary, if you want to call it unnecessary, charges for water that is being lost through the system.
Thank you. Any other questions? Member Scandinavo.
Just a quick question, like in regards to your reconciliation in Appendix C. So like I guess the cash surplus, you're talking 1.6 million, but really like there was a transfer to reserves of almost 8, right? So that's just a point that I hope you can elaborate on for us.
Yeah, you're referring to Appendix C, you said? Yeah. Yeah, so as you see at the bottom of Appendix C, you'll see there's a transfer to reserves of just over $8 million. And so what that refers to is that's the amount that from the tax levy and also through the rate budget, we levy and charge through the operating rates an amount that we collect and then transfer to reserves for future replacement of capital assets. And so in 2023, that amount was that $8 million. And so because we levy and we tax for it, it isn't contributing to the budget surplus, but it is contributing to the financial statement surplus because that is going into reserves. We collected and we're holding it in our reserves, and so that is reserves contribute to the surplus, and so that becomes a reconciling item between the way we budget versus the way we report on our financial statements.
Sorry, just a follow-on clarification. So in reality, there's a surplus. The $1.6 million surplus is a surplus in addition to already good financial prudent management, right? Meaning that, you know, there's already $8 million set aside for what we believe to be future need, and this is $1.6 million in addition to that. So
I wouldn't say it's in addition to that, but it's the 1.6, the budgeted surplus is basically the amount we collected in revenue that exceeded the actual budgeted expenses that were incurred in 2023. That's due to various reasons like vacancies that were left unfilled that resulted in us having less expenses, or some of that might be a little bit higher than anticipated wastewater revenues, as an example.
Are there any further questions from committee members? Councillor Vardy, any questions?
No, I'm good.
Thank you. I think I would just like to take this moment then, if I could, to add a few comments to our statements. One, our cash and portfolio investments are in a very healthy position, and as is then reflected in our reserve balances. And I know sometimes, so to start with, that is excellent, really, really excellent. When I look at some of our neighboring municipalities, financially, we are sitting in a very good position right now. But I always say that's only as good as what you have planned. that's coming, right? And so it may look like we have a lot of cash at the moment, but we also, for example, have a Peach King Center that we will be paying for in the next year and a bit. We have collected monies that we will be giving to Hamilton Health Sciences, in addition to what we have taken out a loan for, the debenture for, but, and that too sits in our cash balances. So I just want to sort of talk about the yin and the yang of it, that, you know, although it looks like we are very healthy, and we are, but there's a reason we have that cash, because, you know, we have monies we've collected already for the hospital contribution, as I said. We have monies that we've collected and I'll say saved over the years towards helping to pay for the Peach King Center and for other projects that we know are coming down the road. So I just wanted to point that out, that we are healthy, but you are only as healthy as what comes in the next few years. And but I do believe we have a good handle on that. So just kind of wanted to share that thought with everybody, that I think we always have to look at it in that light. The other thing that I always look at when we're looking at our financial statements is I always look at what our amortization expense is, which is $6.8 million on our statements. And then I look at how much we have actually spent on capital assets. And I always say we like that number to be at least the same. Fairly close. So if we, because amortization recognizes the usage of our capital assets under our formulas, but is supposed to recognize the reality of them being used up during the year. And we always want to stay on top of what we are then spending on new capital assets, so that we don't end up with, you know, amortizing $6.8 million and only spending $2 million on capital assets. That would then tell me we're getting behind in our capital asset replacements. So if you look at our statement of changes in net financial assets, which you don't have to go there, but for anybody who's looking, that's on page 6, you'll see that the acquisition of our tangible capital assets was some $8.8 million. Mr. Delmonico did share with me, though, that, you know, when I asked, so to start with, it's good. We amortized 6.8, we spent 8.8, so that's a good trend that we're seeing there. But 6.8 is an amortization of existing assets, and the question then became, you know, of the 8.8, how much of those are the replacement of existing assets versus brand new spanking ones that we have never had before? And I believe that number you shared with me was about $4 million there. So that means, you know, we spent about $5 million and we have amortization of 6.8. And I think what we really noticed in 2023 is that we had a lot of projects on the go, but we weren't able to undertake all of them neither. And so 2024 for all of our staff really has been a year of focusing on getting all those projects done as well. So I take heart in that, although we didn't really spend enough on the replacement of tangible capital assets, the direction in 2024, which we will not see for another number of months in those statements, was still to get that done and really to catch up on all of that too. If you look at some of our committee reports and you see the capital projects and what's outstanding, and if you saw those same reports at the end of 2023 and now saw them at the end of 2024, you'd see that we're starting to make headway and catch up with a lot of those too, which is good. So really just kind of two key points that just wanted to share in my observations. Any other questions from any committee members on our financial statements?
Not for me.
Then failing none, I will read the motion and then ask for a mover and a seconder. So, oh, I did. I have a mover and a seconder. I will just read the resolution again and then ask for you to vote. So resolve that report, Finance 24-27, the Consolidated Financial Statement Report dated October 3rd, 2024 be received, and that the Finance Committee recommends to Council to approve the 2023 draft audited financial statements. All those in favor by show of hand, please. And Councillor Vardy?
And Leanne? Yes.
Thank you. And that motion is carried. Item 8.2 on our agenda this evening is our second quarter report of 2024. If I could have a mover and seconder to get it on the floor for discussion, please. Member Scandinavo and Councillor Howe. And then I will turn it over to Mr. Delmonico to walk us through it.
Thank you. Yes, we're projecting an overall positive variance of 1.2 million, and that relates to 683,000 on the operating levy side and another 530,000 on the water wastewater budget for 2024. The main driver of the surplus is we're projecting 650,000 in savings related to salary, wages, and benefits as a result of vacant positions. There was also a $180,000 dividend from NPI, Niagara Power. This is something that we don't budget for, so that's contributing to the positive variance. Legal fees and insurance costs are currently trending under by about 112,000. And there's also some savings that are projected on the water wastewater end, mainly related to vacancies. Although it should be noted that we are going to have a clearer picture on our apportionment of the regional wastewater and water costs for the third quarter update that's coming to the committee in November. So we'll have a better idea then. And as mentioned already, those apportionments can impact our costs significantly. And it's not only based on our consumption, but consumption in other municipalities as well. On the capital side of things, our actual spending is expected to pick up in the second half of the year. Now that construction tendering is complete for the Peach King Center, you'll see that in Appendix B of the report that only $8.6 million of the total $73 million budget's been spent and committed to the end of Q2, and that's because about half of that budget relates to the Peach King Center, and tendering was still in progress as of the end of Q2, which is when this report is related to. So again, the third quarter forecast will be coming back before the committee in a couple months in November.
Are there any questions from members about that report? Councillor Howe.
Through you, Chair, and the Director, thank you. You pointing out the adding to the surplus. But on page 2 of this report, 2428, is a number that jumps out and kind of, it jumps out at me. And that's number 2. It has to do with $75,821 for forecasted deficit, primarily due to integrity commissioner expenses. And I won't expand on that any further.
Thank you. Are there any other questions or comments from our committee members? I see none. So then I will read the resolution and ask you to vote on it. The resolve that report Finance 24-28, which is the 2024 second quarter financial update dated October 3rd, 2024, be received. All those in favor, please. Councillor Vardy?
Yes.
Thank you. And I realize I always forget to say any opposed, but I guess when I see all hands up, I assume there are no hands to come up for those opposed. So that motion is carried. Item 8.3 on our agenda is the memo on the Peach King Center update. If I could have a mover and seconder to get it on the floor. Yes? I'm not hearing anything else, so
I'll move it.
Oh, thank you, Councillor Vardy. And a seconder, please. Councillor Cristangi. So I'll turn it over to Mr. Delmonico.
Thank you. The fourth and final tender package has now been awarded for the Peach King Center, and unfortunately, the tender package 4 came in 800,000 over budget. But the good news is that overall, on all the construction tender packages, even with that, we've still managed to come in 654,000 under budget. Results of the tender package 4 It was the millwork and landscaping components were the main reasons for the overage. The team did take a closer look at that, and the submission was deemed to be reasonable. The reason it came in over was that on closer inspection, the budget that was being carried for those components was too low, was too light for what was the work to be done. The overall, we've had 8 change orders so far that have been issued for $510,000. The most significant was to accommodate additional catch basins and a second stormwater management tank on the northeast of the property. But we've been able to offset those costs through all of those change order costs through the savings in the construction budget, since the tenders did come in under overall. Right now, we're assuming that the furniture and fixtures equipment actuals are going to come in on budget. And overall, we're projecting a project surplus of $482,000. And that includes the assumption that we're going to be using the full contingency, which I think is rather conservative at this point. And but those amounts will be updated in future reports as actual costs get incurred. Is there any questions?
Any questions from committee members?
Yes, Leanne.
Councillor Vardy, go ahead.
I just want to commend them on doing a really good job. This is a very good report. And should we assume from this that we're tracking on time as well?
Through the chair, yes, that's correct.
Okay, thank you.
Thank you. Member Scandinavo?
If I read this correct, like to date, we have used none of the contingency of 3.1. And we're also tracking to be 480,000 over. So to your point, that's a conservative estimate that we're going to use the entire contingency. Let's just, for assumption's sake, say we don't, right? It appears to me that almost all of these costs, unless I'm reading this wrong, are final with the exception of furniture fixtures, right? So assuming furniture and fixtures come in at the 600 that's budgeted, we could potentially be looking at a $3.5 million savings if none of that contingency is used.
Yeah, that's correct. I do want to caution that, you know, it is rare to not use any contingency. So, you know, that could be for unknowns that come up during the project. So, you know, that's the reason why we have the contingencies. But yeah, what you said was correct. Yeah.
Just to follow on, why don't we track change orders against contingencies? Just out of curiosity, like, 'cause it appears to me it's a line item with no budget. Just more of a formatting thing, that's all.
Yeah, we are going to start doing that now that all the tender packages have closed. That through future reports, I think that'd be a more appropriate way of showing that variance.
Councillor Howe, you have the floor.
Thank you, through you, Chair. It really comes down to now we're at that point where the contingency number does lay out there. And not that people would do it, but that becomes low-hanging fruit for construction and the change orders and the saying, oh, you know, we got a little bit extra on that. But we have to just keep, the staff has done a great job. Okay, we have to maintain that focus on not to give the money away just for something that might be nice to have in the building. It's got to be a need.
Member Scandinavo?
I just want to commend everyone on their work, because this looks like we're, you know, obviously you can see outside that we're not done yet, but from a tendering standpoint, looks like we're pretty far along. So great work to everyone here at the town of Grimsby for pulling that off. So thank you.
Thank you. Any other questions on this particular report? Then failing none, the resolution is resolved that the memorandum on the Peach King Center update be received. All those in favor, by show of hands, please. Councillor Vardy?
Yes.
Thank you. That motion is carried. Item 9 on our agenda is correspondence, of which we have none. And item 10 is now under other business, where the notice of motion will be introduced. So I will now step down from my position as chair so that we can discuss that, and Councillor Howe will take over as vice chair now. Thank you. And I will start by apologizing. It is a long one. And I think what we're really trying to do in this notice of motion is help explain some of the points in there and why it is of concern. So if you could bear with me. Whereas the Ministry of Municipal Affairs and Housing has introduced a proposal which would create a new regulation under the Planning Act that would enable developers to use of pay-on-demand surety bonds to secure land use planning obligations under Section 70.3.1 of the Planning Act. Whereas municipalities need an effective method to ensure developers meet their financial obligations as established through their respective development agreements. Whereas a letter of credit, which is what is currently used, provides a guarantee directly from a certified financial institution, namely banks, which allow the municipality to draw on the funds as needed. Whereas pay-on-demand surety bonds use a third-party surety, which are insurance companies, rather than a financial institution to provide these guarantees. Financial institutions are subject to more stringent financial regulations, which introduces additional risk to the municipality and ultimately to the taxpayer. Whereas the process to call on these funds is more complex, may involve significant legal fees, and the proposed regulation does not adequately address downgrading of credit ratings of these insurance companies, renewals and defaults related thereto. Whereas it is estimated that the costs for developing, implementing, and maintaining these surety bonds could have significant financial impact to the municipality, and whereas the proposal takes the decision for the type of guarantee being provided out of the municipality's hands and into the developer's hands. Whereas the proposal was published on the Environmental Registry of Ontario, and that would be ERO 019-9198 on September 16th, 2024, with a 30-day comment period which ends October 16th, 2024. Therefore, be it resolved that Council directs staff to prepare detailed comments on the impact of this proposed change and to submit the comments to the ERO by October 16th, 2024, together with this resolution. And be it further resolved that the same be shared with Mr. Sam Oosterhoff, our MPP, and other municipalities within the regional municipality of Niagara. And at this time, because of the urgency for when the replies need to be in, we are asking that and requesting that, contingent on a 2/3 majority vote, that this notice of motion would be given consideration at tonight's meeting for discussion.
To the committee, any questions, comments? Councillor Kostanji?
Thank you, through Chair. Just a comment on why you limited to just circulating through municipalities in the Niagara region and not the entire province.
The reason, I guess, is just a matter of timing. That we're meeting here today on October 3rd. This is the recommendation for October 7th council consideration. Replies have to be in by October 16th to the province, in effect, and just felt that there was very little runway after our council meeting to do that. The province, which I'm going to say is turning out to be the modus operandi, left a very short time period to have comments from everybody. So we're hoping all the other municipalities across the province saw this and kind of took note of it themselves, but at best, we thought we could at least share our thinking about all of this with our neighboring municipalities, but didn't think there was a lot of time to do much more.
Member Scanlon?
Thanks. Councillor DeVoli, I think it might be helpful, just maybe for those listening, describing in a little more detail what what this practically means in terms of describing what the bond is held for, why it's held, and what the impact is of switching from a financial institution to a surety company, and just for lack of better terms, in layman's terms.
Chair, I'm going to turn the floor over to Mr. Delmonico, if I could, to answer that in more detail, and I will add any other comments after he has described it in detail.
Thank you. Yeah, so through the chair, right now, it's at our discretion what we accept as performance security from developers. So for larger works, we typically require letters of credit. So that's, we take that as security to ensure performance, so that they do what is fulfilled through their development agreements. If a developer were to walk away, for example, we would draw on that letter of credit to pay to complete the work. Those letters of credit are with Schedule I banks predominantly, and they can be drawn on by us, no questions asked. We've never had to in recent memory, but it does provide an incentive for developers to fulfill their obligations. It does reduce the risk to municipalities with the ease of recovery. Like Councillor DeVoli said, the proposed change would take the decision out of the town's hands, so it wouldn't be up to us to ask what security we need, and it would basically be forcing us to accept those surety bonds. And the surety bond is backed by an insurance company. So, that's, we don't view that as secure as a bank. The end result would be that it would introduce more risk for the town and in turn taxpayers. The letter of credit is much more secure, less administratively cumbersome to draw on if needed.
I also took the opportunity to look up a list of the surety insurance companies in Canada, and I have to say, these bonds are primarily used in the construction industry, and obviously not a field I worked in. But when you look at the list of them, I'm going to say I scanned through it, and then I did a resort just of the Ontario ones, and there was hardly a name I recognized on there. Hardly a name. There are hundreds of these companies in Canada that issue these, but not any that I recognized. And when I say that, that doesn't mean I need to recognize them, but I'm just saying that, when we have letters of credit issued by the Royal Bank and the TD Bank and the Bank of Montreal, these are well-known, large capitalized financial institutions, whereas the names on these lists, there were a lot there that were totally unknown, perhaps known in the construction industry, but not nearly as big, and I will say as well capitalized as our chartered banks are.
So in a nutshell, if I may say this, the purpose of these performance bonds are when developers take on a project, and if they are unable to complete it, the town is able to draw on the bond to complete the project. What the premise of this legislation is that this no longer, or potentially no longer, needs to come from a Schedule I bank, in which it allows the town the opportunity to draw upon, but it would be going through basically an insurance claim to see if we can draw it upon. Now, I think we sat here a couple of months ago and listened to a change in the development charge, and it allowed the town an opportunity to select a method in which it felt it best served the town itself. If this legislation changes, is this at the town of Grimsby's discretion, or is this now just form Ontario legislation whereby we are forced to accept whatever assurities they're provided by the developer.
Yeah, through the chair, that's correct. We'd be forced to accept the surety bonds.
Member Scanlon? Okay.
Yeah.
If I could add something to that, within the proposed regulation, there is a requirement that these companies would have to maintain a certain credit rating requirement, and they talk about, Dominion bond rating requirements, Fitch ratings, Moody's, and so on. But what we have not seen or heard from the province on is what happens if we take a surety bond from a company that meets these ratings, and then life changes at that company and they don't have that rating still. What happens if those companies even totally disappear and we are left holding a bond that is in essence worthless or doesn't meet the criteria neither? And so I will just say that I think there are a lot more things the province needs to do before they actually pass this regulation. And so the whole purpose of this is to get our comments to the province, to express our concerns to them about what they're trying to do. And as I've said before, there are always opportunities for us to write to the province and comment on various things. And I sometimes wonder if it goes into a big black void. Then every so often they surprise me and they actually seem to listen. I guess at the end of the day, I don't know if I feel terribly optimistic that we'll be able to get them to change their mind, but at the same time, if enough of us don't speak up and express our concerns, at a minimum, I think that's what we have to do.
Member Scanlon?
So, that's a great point, Councillor Davoli. I had one distinguishing item I was hoping to clarify. If in today's current environment, we had to draw upon one of these bonds through a scheduled bank, what would be the burden of proof to pull that versus what would be the burden of proof to basically file an insurance claim under the surety bonds?
Yeah, through the chair, with the letter of credit system, it's basically no questions asked. It's at our discretion to pull it. With the surety bonds, it sounds like it would be more similar to an insurance claim where you'd have to demonstrate the need or proof.
So, I mean, in reality, obviously, it shifts the risk around. If this committee is supposed to be discussing this, I would certainly wager that most of us agree that we'd like to stick with the letter of credit process. So I think it's, wise that we voice our concern while we still have an opportunity to do so.
So with that, I think everybody's had an opportunity to ask or to comment. So at this point,
You don't need to read all of it.
I'm not going to read all of it.
Councillor Davoli moved
Okay,
it.
yes.
And seconded by Councillor
Okay.
Vardy. And just to show you.
Okay, all that said, moved by Councillor Davoli, seconded by Councillor Vardy. Thank you. All in favor? Get the hands. Thank you.
Yes,
Carried.
Julian.
Carried.
Thank you, everyone, for that discussion and for the questions. And I will now almost bring us to the end of our meeting. But is there any other business that any committee member would like to raise? Councillor Howe. Okay, that was not a question. That was just a slip of the finger on the mic. Any other committee members have any questions or matters they'd like to raise this evening?
Nothing for me.
Then seeing none, we'll just remind everyone that the next Finance Committee meeting is scheduled for October 24th, 2024 at 6 p.m. And this meeting is now adjourned. Thank you.
Wait, did you say October 24th?
October 24th, yes.
Okay, thank you.
Thanks. Good night.